Hey everybody, Boris. Welcome to the commodity dollar update for November 7th to November 11th. Aussie dollar, dollar CAD, and Kiwi dollar on the technical side. So I think the interesting thing this week is going to be the fact that the COM dollars could be sort of a port of safety or a port of lower volatility than the majors because, of course, they certainly will be affected by the outcome of the U.S. election. They probably are not going to be nearly as badly hit. And there's also the other thing that's going on here, which is that we actually have major economic news on the commodity front. We don't have any real significant news on the major front. There's nothing really out of Japan or Europe or US on the economic front to move markets next week. It's all political. But on the commodity side, of course, we have the RBNZ meeting on Wednesday. That's going to be very, very key coming after the election. So it'll be interesting to see how that works out. And that's probably going to have a big impact on the Aussie-Kiwi trade. Additionally, the dollar CAD trade is certainly going to be very affected by the political vote as well. Now, the Canadian dollar has actually weakened considerably, mainly because, of course, oil prices have come down, and also because the trade situation has really deteriorated significantly, and that's really weighing because that's been a factor that has been pointed out by the Bank of Canada Governor Polos as a reason for why they are going to be much more accommodative than they thought for much longer. Having said all this, the underlying economics in Canada are actually improving. The jobs data is again beat to the upside this week and suggests that basically overall demand in Canada is actually better than the market thought. So you have these mixed signals, but dollar Canada is going to be sort of a secondary story. Obviously the most obvious story is going to be dollar MEX, which we don't cover, but dollar MEX will be the big election eve proxy for where things go. But dollar CAD will be the second one, and I think if you have a Clinton win, that's certainly going to be positive dollar CAD, basically, and the Trump win will be very, very negative. The Canadian dollar it will actually even be a much bigger move in dollar CAD to the upside because of fears of a trade war going all the way around. So anyways, let's just take a look at the support resistance levels. They're much more muted here, 77 to 75 in the Aussie. Canada really on its way towards taking out the 135, really, really itching to take out the 135. We came very close on Friday, and it looks to be like it really wants to go there, irrespective actually of the underlying fundamentals. It just it looks to be on a stronger technical path here with support of 132. And Kiwi certainly performed much better last week with a move back off the 70 handle towards the 72 as support level and 74 on the resistance level. Let's just take a look at the charts here and see how things shape up. First with the Aussie, again, we don't have any real Australian data next week. Aussie is still very much, ultimately Aussie is still a 77.50, 75.50 range. It's just even, as a matter of fact, if you look at it on a longer term basis, all you're seeing is that the range itself get compressed more and more down to like essentially a 100-point move. It's a very, very tight range. Aussie has just been trading 30, 40 pips a session, which is very, very low. Generally, when you get these kind of low volatility moves, a break one way or the other will tell you the direction of the move. But I think it may be premature. I think we may still just be trending around here, trapped by 77.50, 75.50 for the time being, mainly because there's really just nothing on the forefront to move markets one way or the other with any degree of drama or direction. Now, dollar CAD, on the other hand, has been moving very strongly towards the 35. Now, the only thing I think that's sort of interesting, if you look at it from a technical point of view, and it may give you sort of a red light in terms of getting long dollar CAD, is that this is a pretty strong flame out candle. This is a kind of a shooting star candle here. In other words, we went through 34.60 and then came right back down towards the lows. To me, a word of caution. So how would I trade this? I think at best, if you want to be a buyer of dollar CAD, you'd really need to get probably around the 33s as your first entry on a dip, or, and this is the other key thing, only if there is momentum to break above the 33.60s, 34.60s. In other words, if there's a lot of momentum to run above and take out the highs here, then this shooting star would be overshadowed, and we have a very strong chance to move towards the 35s and ultimately possibly even to 137s before momentum runs out. But I would not be coming in long at this point. because this is a sign of caution and suggests that maybe we have drifted a little bit lower, possibly all the way down to 33, certainly here. Any break, it's almost impossible, honestly, to figure out what the impact of the Trump victory would be on dollar CAD, because it is negative dollar, of course, but it's also negative Canadian dollar. And I'm at a loss, frankly, to figure out how that's going to trade on a surprise basis. Other pairs are going to give you much cleaner clues as to what's going to work and what's not going to work. So I still think, I guess, it would still be more negative dollar than it would be negative CAD, and would probably come back down to 32.50. That's the big support here, around 32.50, 3,200 ultimately support here in CAD. But overall, this is a upward trend, but a caution in the near term, because we ran out of momentum very quickly here on Friday, and I wouldn't be chasing it at this point. And then last but not least, we have the Kiwi, and the Kiwi is very interesting. So Kiwi is really interesting for a couple of reasons, because certainly very, very strong move last week, a series of higher lows, technically looks very positive, but we're up against this very important 73.50 resist line. 73.50, 70, basically, the 73.50, 74.50 chunkiness of resist line. This was the peak level. And we're coming against an RBNZ rate cut on Wednesday, which is very likely going to happen. I think 30 out of 33 economists forecast that. So the critical question is the market going to completely discount the cut, or will we run into some profit taking against the 73.50 and we come right back down towards the 72s? That's what is going to make it very interesting, I think, as a Kiwi trade, especially in the post-RBNZ environment. If the market does not react negatively off the RBNZ rate cut, then we have a very strong chance to move all the way out to 7,500. That's the key thing, I think, that's going to surprise the market, meaning that everybody's already factored in the rate cuts, and the market's still going to be bullish on a relative yield basis for Kiwi. So I'll be watching this very carefully. There's two ways to trade this, and the way the price action moves right after the decision is going to give us a very good clue as to which way the Kiwi is going to resolve. Wish you guys the best of luck, the best of trading. Boris, over and out.